What's up, guys? This is Reggie from WaveTech Forex. So I wanted to give you guys a two-part video on how we enter the trade using our WaveTech exhaustions and our other indicators that come along with it. This one is specifically about how we enter it, and then I'm going to make another video on trade management. It's going to just talk about how we manage our trades using these other tools that we provide you with when you are a part of WaveTech Forex. Let me just say that this here is just a basic foundation. I wanted to give you guys a basic foundation. From there, you could use other techniques in Confluence for extra confirmation. So don't let this deter you from what you might already know, and basically just allow this to help work with you in your strategies. This is just something I like to do and that we use so that we at least have a guide as to how we enter the trade and we establish a trading plan. Okay, so this is the first step that I do. This is EuroCAD, and this is the pair that I gave out last week Sunday on the 18th, and it was exhausted already at the top, so we're going to be looking to short or sell. Okay, when I look at this exhaustion indicator, I want to see everything all converge at the top. Not halfway, not somewhere down here, almost. I want it up there. And I want the 4-hour chart because ultimately we'll be able to stay in longer trades, and it's a better reversal or higher probability reversal point when you're using our indicator to its fullest. Okay, so trade was up here, and I marked it with a vertical line. Why? Because so that when I drop down to the lower time frame, I can establish where I'm looking at. So once I find the 4-hour trade, I'm going to drop down to the 30-minute or 15, your preference. I'm going to stick with the 30. Okay, we're dropping down, and we can see using that line that we drew that price was not quite ready yet. So what are we going to do? We're going to wait. We're not going to be pushing trades. We're not going to be forcing things. This was where it was right there. So you guys can see. Just trying to point it out. Alright, so we're going to wait until price or until our indicator goes up here in this same territory so that our 4-hour and our 30-minute can all be aligned and it'll be ready to go. Okay, so let me just grab my replay tool. I love TradingView, so we can go back and we can see exactly in real time what's going on. So I'm going to go back and I'm going to mark it to right about here so we can see what's happening. Okay, move this over here. Alright, that was step 2. Look for exhaustion. If it's not ready yet, be patient, let price come to you, and now from there we're going to determine how we're going to enter based on if you're going to be aggressive, moderate, conservative. I like to be moderate about it, just so that I can have a little bit more confirmations. But let's go over an aggressive style. What we'll be looking for is we'll be looking for an engulfing candle. An engulfing candle, if you don't know what that is simply a candle that is much larger than the previous candle before it. So we're going to be looking for a bearish candle, and in this case a red candle on my chart. It could be a different color for you, but my bearish candle is going to be red. Okay, so let's go and play this and we can spot the aggressive trade. It's gonna go, price is going, and it's gonna be right there. See that, folks? That's gonna be, let me go back a little bit. One second. Okay, this candle right here. Okay, 30-minute chart, 30-minute candle, it closed below the candle before it, giving me a confirmation of an engulfing bearish candle. So now you can enter the trade here. So your trade would be right here. Okay, let's give you an example. This would be your entry, and we're gonna call it aggressive. Okay, So you would have entered at 141 or 161428. Okay, and from here you're gonna establish your risk. I like to use a 2% of my account in a 10 pip stop loss. We're gonna be providing you with those kind of tools in your back office, so stay tuned for that. I'll be covering that over in the next video as well. So that's gonna be your aggressive trade. Okay, you enter the market, set your stop loss 10 pips high above this. So let me count 10 pips. 9, 10. Okay, so roughly right around there is gonna be your stop loss. Okay. So I'm gonna delete this box real quick. So that's the aggressive. Now for the moderate, what are we gonna be looking for? We're gonna be entering on a candle close. So after that candle has closed, below the SMA. What is the SMA? It's a smaller line here. It's a moving average. So we're gonna enter it when it flips. What does it mean when it flip? It means when this indicator, since we're in a sell, it goes from green to red. Okay, and we want it to be priced to close below that. So we're gonna play. Let's see what our price does. There we go. There it is right there. That will be our second entry, and that'll be a moderate. So we can establish a vertical line, horizontal line here, and we can enter right here, and we can adjust price for our stop loss 10 pips above, right? So somewhere around there is going to be our stop loss. And let me just format this real quick. And this is going to be the moderate, which is my favorite way of entering. So you can see once it closed below, about 8 out of 10 times that SMA, smaller moving average, is gonna flip red. Let me go in and show you a better picture. There you go. You can see it flipped from green to red. Okay, giving you confirmation to enter the trade. Flip this back to candles. Now we're gonna do the most conservative way. Okay, is when we're gonna take A and B and a cross with the simple moving, smaller moving average crosses the bigger moving average, which is this thicker line here. That's how we're establishing the difference between the two. Okay, so we're gonna let price play out. I'm gonna press play, and you can see we're gonna be waiting for price to break down below the bigger moving average. So right around here, we're gonna enter on the close, right? These two candles didn't close. This candle closed below the bigger moving average, and the smaller moving average is almost there. It's gonna cross, I think, the next candle. Okay, there it is. Went a little too far. So right around here would be your conservative entry. You can either take the cross of this small moving average, or when a candle closes below this bigger one. So either or. I should just edit this real quick. Let me add it in here. So candle close below big moving average. Okay. So either or. When you get a candle close below, what is candle close is when this candle on every 30 minutes is gonna close. We're gonna enter on the new candle. We're gonna set our stop loss 10 pips. So we're gonna enter right around here for the conservative. Okay. Now you can see here that there's a significant difference between the three entries, but it's all determined on what you're willing to risk. Okay. Again, I like to use the moderate, where I take the candle close below the small moving average. So you can see already, if we would have entered on the aggressive, let's see where price plays out. Gonna let price play out a little bit. Small retracement there. Still going. You can see our waves are starting to make its way down here. Let's just see how many pips we would have caught. I was personally in this trade last week, so let's see. I forget how many pips it was. Let's speed this up a little bit. Consolidation. Alright, and there you go. So if you want to take a pip measuring tool here, this one is called a price range. You can find it on this column. I believe it's 1, 2, 3, 4, 5, 6, the 7th row, and it's going to be price range. Alright, so click on price range, and we're going to enter. We're going to measure if we entered at the moderate. Okay, I want to go moderate. So it's this line right here. I'm going to click, I'm going to drag, click, drag all the way down to where price went its furthest. And you already have 318 pips that this trade has moved. Alright, so, which is crazy. You can see here that 4-hour exhaustions really love to go in your favor when traded accordingly. And this was a very, very simple way on how we use our indicator. Now, if you add that with other other confirmations that you like to see, the odds are better for you, and it gives you a little more confidence when you input trades. So this is the first video, and I just wanted you to have a basic knowledge of how I enter it, and therefore you can tie it into your trading style. But as you can see, this is very simple, very easy to use, and as long as you have a trading plan and you develop your trading plan, WaveTech Exhaustion is ultimately going to help benefit you. So to the next video, I'm going to show you guys how we would utilize these extra tools here that you see, and I've got a couple more to show you that I didn't input or I didn't show you on my screen here, and how we would utilize these tools to help you post trade, so trade management and stuff like that. Alrighty, so you folks have a blessed day, take care, see you on the next video.